What is the difference between whole life and term insurance? That is a big question. The simple answer is that whole life is just that. You bought insurance for your whole life. It's one medical examination, and that insurance, assuming your premiums are paid, will take you through the end of life, right?
Can you have whole life with a chronic condition?
Yes. Oh, it doesn't matter. So
Okay.
it doesn't matter. So the difference between whole life and term insurance is a personal choice of the the applicant, right? So it doesn't matter. There's not you don't qualify for whole life. You have to have term insurance. It doesn't work that way. It's your choice. You either qualify or you don't. How you pay for the policy is up to you. Term life and whole life are two options to pay for those policies. So term life is essentially what it says, right? There's a term. Sometimes it's 10 years, sometimes 20, 30, but there's a definitive term. And at the end of that term, your premium will go up, right? Because you're older at that point. So the benefit to it is that you can buy a lot higher face amount. You can get a lot more insurance for less money. But there's an end.
But the time
there's
on
an
it,
end
yeah.
date, right?
Yeah.
So the whole life is a cash value policy, a permanent policy. They're classified in different forms and fashions, but there's literally hundreds of different types of insurance policies, life insurance policies. Whole life and term are two generalizations, basically, right? I refer to them most likely as short-term, long-term, or temporary, permanent. And you can combine these as well, and we do that actually quite frequently, right? Where we'll take the temporary insurance to cover a temporary need, like a mortgage, right? A mortgage is 30 years long. They say, Joe, I'm going to live in that house the rest of my life. I love it here. I like my neighbors. Everything's great. I'm going to pay it off, and I'm going to stay here forever. Great. We want to just ensure that that debt is secured so that if something does happen, your family can stay in that house. Well, after that home is paid off, maybe you're 60, 65 years old, and if you go to apply for that contract now, it's more expensive. So there's a permanent piece of the insurance that will carry you through your end of days.